Let's talk about liquidity, because I think you've heard me talk about this before. It is super important. Liquidity keeps growing. That's the debasement of currency. It's growing at 8% a year. That means the value of scarce assets, S&P 500, real estate, gold, should grow at about 8% a year just because the currency is being devalued. Now, there's another maybe 3% inflation rate to add to this, so 11% is your hurdle for your future self not to be getting any poorer. And most assets just don't do it.
These things happen the same way they did the day before. As the stock market opened on Wall Street, there was a quick push that made Bitstamp hit new all-time highs of just below $77,000. Interest rates were dropped by 0.25% by the U.S. Federal Reserve after the most recent meeting of the Federal Open Market Committee. This caused a lot of changes in the market. Raoul Pal said that the risks that the Fed faced in trying to do its two jobs, control inflation and jobs, were mostly out of whack. As of late, it looks like the economy has kept growing quickly since the start of the year. There are more jobs available now than there were before, and even though the jobless rate has gone up, it is still very low, he said in prepared remarks. There has been some progress toward the committee's goal of 2% inflation, but it is still pretty high. CM Group's FedWatch tool shows that on November 8, the markets agreed on what the Federal Reserve should do. Most people thought that another 2.25% cut would happen at the next FOMC meeting in the middle of December. It said in the Kobe letter that the Federal Reserve's choice to change interest rates could still be in danger if long-term inflation trends sped up.
Okay, firstly, I've said this before to you all, it's all about demographics. Remember that magic formula that I've talked about in the past where GDP growth equals population growth plus productivity growth plus debt growth. Okay, got that? Well, this is the important bit. The labour force participation rate in black here has been falling for a couple of decades. That is because the population is beginning to age, and so less people are in the workforce. Now, you can see in pink, it's the births-deaths rate that is actually driving this. So as population growth has been slowing, the workforce slows over time as people get older. Okay, so that's pretty clear. An old population, however, because of the magic formula, less people in the workforce means less GDP. So trend rate of GDP has been slowing. So the economy's been slowing over time. This chart is a chart you'll never see anywhere else, and I think it's the single most important chart in all of global macro. So what is it? It's that same labour force participation rate, but this time it's against US government debt as a percentage of GDP. Now it's inverted here, and what it basically tells you is that as the labour force declines in size, or percentage of people involved in the labour force, the government takes on more debt to offset the growth. This is what it's all about. This is the big economic mess we're in. It's a mess created by demographics that I've talked about before. This chart is incredibly important. Now, look at the little divergence recently where government debt has been growing, but the labour force participation rate hasn't. That's the recent influx in immigration in the United States over the last 2 years, where some 6 million people or so have immigrated into the US, and that has kept the labour force participation rate higher, offsetting the retirees. But that's unlikely to continue, particularly with the new government. So what we'll see is the labour force participation rate decline and government debts keep growing. Okay, so we've got all of these massive debts. I've talked to you about the Everything Code. The Everything Code is the servicing of these debts by using liquidity. So liquidity is the debasement of currency. To service these debts, they print more money to service them. It's as simple as that. That is the game we're in. That is the Everything Code game. Let's talk about liquidity, because I think you've heard me talk about this before. It is super important. Liquidity keeps growing. That's the debasement of currency. It's growing at 8% a year. That means the value of scarce assets, S&P 500, real estate, gold, should grow at about 8% a year just because the currency is being devalued. Now, there's another maybe 3% inflation rate to add to this, so 11% is your hurdle for your future self not to be getting any poorer, and most assets just don't do it. But you can see how important it is by this chart that you should have seen before, which is the chart of the NASDAQ versus our global macro investor total liquidity. This is the total liquidity around the world. That's government liquidity, central bank liquidity, and private sector M2 and other measures. So it's the total amount of money printed by the system. And what happens is the NASDAQ is 97.5% correlated to it.
In the end, we think the Fed would have to change its mind if long-term inflation expectations started going up. At the moment, they are 2.1%, but they haven't gone up yet. This was written in a different thread on X. That's a big if. But as 2025 approaches, anything is possible. The price of Bitcoin hit a new all-time high and its highest daily close ever. It didn't seem to care that the economy was being manipulated. At the time this was written, BTC was up 8% for the month, with gains of 19.6% being the main reason. Last information from ResourceCoin showed that there was a lot of new money coming in on both sides of the trading price on the exchange order books. The platform responded on its X account that not trading would be best right now because of high leverage and liquidity. The goal was to get a quick boost before things got too hot. Market changes the way you buy, as people talked about changes in liquidity. Cryptomutant said that the 720000600 mark needed to be hit to keep people positive in case of a correction.
That's incredible. The other extra bit that's not correlated that you're seeing now is the secular growth in technology. Because technology is a secular trend, because tomorrow is more digital than today. And obviously, Bitcoin, massively driven by total liquidity. This time it's about 87.5% correlated. Reason being, there's a faster adoption curve, exponential growth that happens in Bitcoin or all cryptocurrencies. So that's what lowers the correlation, is in fact the outperformance. But anyway, liquidity drives everything. Now, since 2008, everything has become cyclical, because in 2008, every central bank around the world reset interest rates to zero. It was like a debt jubilee. You don't have to pay your interest, so the world could kind of recover from the debt blow-up of 2008. And for about 10 years, we had zero interest rates. And what the governments did is they reset all of their debts to between 3 and 5 years. That cycle has created a perfectly cyclical business cycle. The ISM, the Institute of Supply Managers survey, what we've got here is in black is the current cycle, which is it's currently at its lows, but the forward-looking is actually just the previous cycle moved forwards and inverted, because it keeps repeating the same cycle. So that same cycle is repeatable and understandable and forecastable. Sure, the wiggles may change, the direction will be right. And it's driven by this. This is the distribution of debt in the United States. If you look at the first two boxes, well, that's what 72% of the entire debt structure is 1 to 5 years, which is what I talked about before. This is what's causing the cyclicality that you see in the economy and these 4-year cycles. So because they're using the liquidity to manage the debt, the rollover years, which tends to be this yellow and the kind of weird peachy color, the summer and fall, those are when the peak debt rollover happens. So they add lots of liquidity. So if you look at that, you can see the liquidity piling into the system as they start rolling those debts over, and they need to print more money because they have to issue new debt to pay the interest on the old debt. Sometimes they use a central bank balance sheet. Other times they just create liquidity, and it's done on a globalized basis. Right now, China's the big liquidity driver. And then you get those blue years, which are the winter years, when they start withdrawing liquidity because they don't need to service the debts because there's no debts around those periods of time. So that's why we get this cycle. And this cycle creates the Bitcoin cycle. It actually corresponds with the presidential election cycle and also the Bitcoin halving cycle. They're all those summer months. The summer months tend to be pretty strong. You can see the previous examples, 2012, 16, 20, all good months, all good seasons or years. And then fall tends to be very strong. The fall in 2021 was still strong, but it had a stunted cycle because liquidity was starting to get withdrawn because they put so much in. But if you look at 2017 and 13, they were gigantic. So the fun is yet to come. When you look at it in year-on-year terms, you can see the cyclicality and how related Bitcoin is to global liquidity and how the seasons dictate that. So what we're looking forward to is the big rises in price ahead.
According to figures from Farside, BlackRock's spot Bitcoin ETF saw inflows of $1.01 billion on November 7th. This was its first day of inflows after 2 days of outflows totaling $13.03 million. Coin says that Bitcoin reached a new all-time high of $76,900, 82% of the $1.34 billion that came in from the 11 U.S.-listed spot Bitcoin ETFs that day went to Fidelity. Clever start. The Bitcoin Fund got $19.09 million in new money, and the ARK 21 shares Bitcoin ETF got $17.06 million. Tomorrow is going to be another big day because traders expect even more money to come in. The Bitcoin therapist and crypto trader got rid of 4000X fans. A financial analyst at Sony called Reg and told him 100,000 fans to get ready to pump Ember. Zaya Ulwuk, a crypto expert, said that Bloomberg ETF analyst Eric Binns was surprised by the size of the inflows, even though he had expected a big number based on the trade volume the day before. That date has by far the biggest one-day flow of any Bitcoin fund ever. Vicon wrote in a post on November 7X,